Stocks are crashing, cryptos are crashing, all financial markets are either correcting big or crashing. I mean, Tesla's crashed almost 50% in the last couple of months. Apple, Google, big stocks, they've all crashed by more than 25%. Bitcoin crashing, altcoins, I mean, we're talking more than 50% crashes. There's a hell of a lot of fear in the markets. However, having been trading and investing financial assets for several years now, in my honest opinion, there is no better time to get in or to invest in these assets than after a crash. In fact, the bigger the crash, the better, because afterwards, unless America disappears and all these companies like Apple, Tesla, billions of dollars of market cap goes to zero, right? They vanish, the whole business falls apart. But unless if that happens, you're bound to make money and a lot of profits if you're patient. If you look at the longer term picture of things, right? Bitcoin, right? Take Bitcoin as an example, or take Apple as an example, right? If you just go on TradingView or go on Yahoo Finance, look at a chart, right? Look at a chart technicals. Over the last 10 years, right? No matter when you bought, right, you would have been in profit, right? If you look at the last 10 years, these assets, these financial assets, what happens is that they gradually go up, right? Over the long term, they are going up, regardless of temporary volatilities, right? With cryptos, temporary volatilities can be huge. But here's the thing, right? In the long term, they're always going up. So look at this in the long-term picture of things. Quite honestly, there is no better time than to buy them low, right? The key is to buy them low. And if you bought them quite low and they keep dropping, another technique you can use is DCA, dollar cost average, right? So don't go all in, like right now, don't go all in, maybe go in 50%. If it drops more, go in more. And if it drops more, go in more. But by go in more, I mean invest in it more, right? Instead of selling on the loss on the way down, you actually buy more in order to lower your average entry price. The rest is really just patience. If you get in the right stocks, get in the right financial instruments, cryptos, right? If you get in them low and if it goes against you, your dollar cost average, right? Some useful indicators, technical indicators you can use are EMA 50 and EMA 200, RSI, right? RSI to gauge, when it's super oversold, so you can buy more, and also it helps you to exit when it's super overbought. And the EMA 50 and EMA 200 tends to be levels that, when you're value investing, right? Because if you're investing near the EMA 200, right, you are value investing because you're investing into something which is below its intrinsic value, rather than chasing all the way hype up there, right? Because most people lose money in this game. Why? Because they get in all the way at the top, right? I bet you 3 months from now, 6 months from now, a year from now, right, when Bitcoin's gone to 200K, Tesla is like more than double where it is now, or Apple and so on,